Hey everyone, welcome back to Corporate Decoder. Today QNCX just filed an 8K detailing executive changes and conditional resignations, and I am seeing a strategic pivot that investors need to understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is essentially setting up a leadership transition tied directly to a complex merger and financing, and it is worth paying attention to how this plays out. Alright, let's dive into this filing from Quince Therapeutics Incorporated. This is a Form 8K, which is used to announce major events that shareholders should know about. The big news here is that two key executives are conditionally resigning. Dirk Thye, who is the Chief Executive Officer and Chief Medical Officer, and Brendan Hanna, the Chief Operating Officer, are stepping down. But here's the catch, it is not immediate. Their resignations are conditional. They will only become effective 2 business days after a special shareholder meeting that is planned for the 25th of September 2026. And this is all contingent on shareholders approving 3 very important proposals. The first proposal is pretty technical. It is about approving the issuance of new company stock. This is tied to their acquisition of Orphai Holdings Therapeutics and a concurrent private placement financing, which they call a PIPE. Basically, when they bought Orphai and brought in new investors through this financing, a lot of new shares are going to be issued. This proposal needs shareholder approval because the number of shares being issued is more than 20% of what is currently outstanding, which triggers rules on the Nasdaq Stock Exchange. The second proposal is also about issuing more shares, specifically related to the Series C preferred stock and warrants that were given to investors in that PIPE financing. This again is a Nasdaq requirement to ensure certain price conditions are met. The third proposal is simpler. They want to increase the total number of authorized shares of common stock from 250 million to 275 million. This is necessary to accommodate the shares being issued in the acquisition and the financing. Without shareholder approval on all 3 of these points, Thye and Hanna will likely not resign as planned. Now, in anticipation of these changes, the board has conditionally appointed 3 new key people. Bridget Roberts Maryland will be the new Chief Executive Officer. She is currently the Chief of Corporate Affairs and has a background with Orphai, having served as its CEO before this acquisition. John Militello, CPA, is set to become the Chief Financial Officer. He has an extensive finance background, including a recent role at Rocket Pharmaceuticals Incorporated, and Keith Vandrick, PhD, will be the new Chief Operating Officer. He has been with Quince Therapeutics since the acquisition as head of technical operations and previously held significant roles at Orphai. These appointments are also tied to the same shareholder meeting date and the approval of those 3 proposals, so it is a complete leadership reshuffle contingent on shareholder votes. There is also a mention of the board size being reduced from 5 directors to 4 immediately after Dr. Thye's resignation becomes effective. They are also looking to appoint an independent director, which is generally a positive sign for governance. The filing is signed by Dirk Thye himself, dated the 31st of July 2026, indicating these events are happening very recently. Looking at the broader context, Quince Therapeutics Incorporated has been involved in a significant acquisition of Orphai Holdings Therapeutics. This filing is essentially the post. Acquisition, integration, and leadership realignment. The company's market cap is currently around $23 million with a very wide 52-week trading range, suggesting a lot of volatility. They have a relatively small employee count of 38. Recent headlines show that Quince Therapeutics Incorporated is indeed seeking approval for this merger dilution and a significant private placement financing. There is also news about resale of shares tied to the Orphai deal, which indicates a lot of share movement and potential dilution concerns for existing shareholders. Despite some positive phase 2 data for a specific therapy, the stock price has seen some dramatic swings, and there is news about stockholders planning to sell a large number of shares, which could put pressure on the stock. This 8K filing is all about managing the fallout and structure after the Orphai acquisition. The conditional resignations and appointments show that the current leadership is transitioning out, likely as planned from the acquisition agreement, and a new team is ready to step in, but only if the shareholders give the green light to the necessary share issuances. What I find most telling here is the dependency on shareholder approval for these executive changes. It highlights the dilutive nature of the Orphai acquisition and the PIPE financing. For a company with a market cap of just $23 million, issuing a significant number of new shares can heavily impact the value for existing shareholders. Historically, companies undergoing substantial dilution through acquisitions and financings, especially in the biotech space, can face significant price pressure. For example, when other smaller biotech firms have pursued similar dilutive strategies to fund acquisitions, we've often seen stock prices struggle to recover for an extended period, sometimes leading to a further drawdown of 40% or more over the following months. The company is essentially asking its shareholders to approve a deal that will significantly increase the number of shares outstanding, which is directly tied to leadership changes. While the new team brings relevant experience, the core issue is the dilution. The authorized share proposal to increase shares from 250 million to 275 million is a clear indicator of this. They are asking for an additional 25 million shares, a 10% increase in authorized shares to facilitate the acquisition and financing. This is a critical vote for current shareholders, as it will directly affect their ownership percentage. The risk I am watching is how shareholders will react to this dilution. If they vote no, it could trigger a cascade of uncertainty for the current executive leadership and the future of the Orphai integration. If they vote yes, the new leadership will be in place, but existing shareholders will see their stakes diluted. My biggest concern is whether the acquired assets and the PIPE funding will be enough to drive significant future growth to offset this dilution. What I am actually looking for is clear evidence that this acquisition and financing are truly transformative and will lead to substantial value creation in the near to medium term, beyond what is currently reflected in the company's small market cap. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.